Are you someone with some trading experience or simply just new to trading? So today's video is all about making an average $1,000 profit per day by following the easiest and most simplest trading strategy out in the market. To master this simple but powerful strategy gives me the time, location, and financial freedom to live the life we all dream to live someday, where most of us never get to. So, making $1,000 on average per day does not come by luck. This is also not because I'm obsessing myself with analysis paralysis and using a million different indicators. In fact, it took me years of dedicating time to trade, test, and learn to come up with this one simple but powerful strategy. If this sounds good to you, feel free to stick around where I will be breaking this simple but powerful strategy down step by step, so you have a good understanding how to execute. And at the end, I'll finish off this video with real life examples to demonstrate its success in action. Please don't forget to like and subscribe my channel, and I'll see you shortly after this short intro. Right, this strategy is broken down into 4 simple steps. Let's dive right into the chart and go through that first step. Okay, so first step we're going to talk about is direction. Any trader out there needs to know where the market is going. If you don't know where the market is going, you're just going to take random trades and you win some, lose some, then it becomes like going to the casino. But in this particular step, I've got a very precise pattern I'm looking to tell us where market is going, and I'm going to take you through that first. If you haven't seen my my swing pattern video, I'll link it into the description below, but I'll go through it briefly again here so we're all on the same page and see how I use it to find direction, and you'll see through the remainder of the video how I use it to enter and all of that. So what I'm going to do here is I'm on a daily chart right here, and I want to just maximize it a little bit here so we can all see what's going on here. So I'm looking at swing points, and in my mind a swing point, if I want to go bullish, I would look for a down candle, the second down candle forms the swing point, then a third candle, so white candle that does not take out that low but validate the swing point to go higher, and that to me is my pattern. And I'll take, here's another one. If you want to go down, you want to see 2 consecutive up candles where the second candle forms the high of the swing point and the third candle is a black or down candle closing below the open over here. Closing above the open here, it's below the open, and that indicates to me bearish movement. And how does it work? It's a very high probability setup. If you look at this swing point that formed here, it's got to be down candles and an up candle. The fourth candle might retrace in and then target that up candle's high. Now on a daily chart, it's very powerful because that pull down all the way up there could easily be your 50, 100 points. You cannot use this, what I'm showing you here, in a lower time frame. You can only use this on your weekly, daily, and 4-hourly. That gives you way more scope to a return on your investment when you actually take a trade on a 1 minute or 5 minute. But this is just to illustrate to you on this day when this happened, and I'll give you another factor now that validating this to be a strong up move is we've saw this. I've marked out that high. when you know, the market actually opened lower, it retraced and then pushed higher. Now that on its own gave you ample, you know, entry opportunity for you to actually make money. Let's see what happened here. There was a down candle, and an up candle closing above the open there. I know it went up higher there, but the next candle open, it went down. You looking for longs and target that high, and that's what it did. Now the inverse happening here. There's an up candle, and then a down candle. What happened here? There was that, you know, more like a gap down. It never came back up. But if you just follow, you know, on a lower time frame, there must have been some sort of entry, whether it was London or New York, to give you opportunity to target this low, and then you can look for other lows, you know, or fair value gaps, and so forth. And I'm going to take you guys through what happened this past week actually. Just a step back, using this pattern on its own with a fair value gap here, that just gives you more, you know, framework to say we form a fair value gap, we're rejecting it, we close up, so probability for price to move higher is very strong. We just need to find the right entry point or the right place to actually take it all the way up there. If you go to this past week, this was NFP Friday, that was your Monday. Big up push candle, breaking structure, and down candle. Now we're just waiting for the next day to happen. That was Monday, and then Tuesday, sure enough, because it's down in a fair value gap, up close above the open there, and then we've got this nice pull down retracement, does not take any lows out, and then this big push up where we are today. So that, guys and girls, that is how I find direction. You can go back in time, test this a bit, comment in the description below, ask me questions if something's not clear, but it's very simple. All you got to do, you look for that to form, you look for that to form to take that, you wait for that to form to take that down move. I don't know what was this, so if this was also a down candle, this long pin, if that was up, you could have looked for entries over here, but there was an entry that we played this past week. And yeah, let's move on to step number 2. Right, in step number 2, we're gonna focus on where are you trading from. Now that you know what the direction is, but now you need to know where are you trading from. So let's look at this daily. We're going to move to a lower time frame now. So now we've seen this form here, and now we know we're trading from a fair value gap that broke structure. So we know already, or we've got a very good, let me just mark this out. That's your break of structure. And we've got a nice fair value gap here. Let's call it a fair value gap. Now we know, all right guys, if price comes back in here, there's a very likelihood for us to look for a bullish pattern. All right, so now we're trading from a shift through a break of structure, a fair value gap that formed. We came in, we NFP touched in, we waited another day to see what we do, and we closed above. Now we know we are coming from a place that's very bullish. We need to understand on a lower time frame, where are we trading from, and then we'll take you to step 3. But before we get to step 3, let's dive down to a 5-minute chart and see exactly what transpired over there. Okay, here we've got, we've popped down to a 5-minute chart. This is the fair value gap that we saw on a daily. There's a lot of moving up and down. And I'll take you guys through a nice, you know, at the end of this video, a nice example of what happened on NFP that was actually a perfect setup. But for now, we focus on that that Monday that closed up higher, that validate that swing point. Now we want to see what's going to happen on Tuesday to give us a bullish, entry, or where it's going to trade from, in order for us to, to take it to the next step, the fourth step, and to actually execute the trade. So here we can see and look what we can see here. So that's all Friday, Sunday, Monday, and then Tuesday starts here. So on Tuesday, which was just there. So on Tuesday, we can see we flowed, we went sideways, and London went up, and then we get to the time I like to, to trade this, to trade. I normally trade either New York Open, which is 9:30 a.m. New York time, or I'll wait till PM. We're gonna just focus on this for a bit, and I want to show you something that is quite interesting. So from a retail perspective, if you have not done the analysis to say, hey guys, we're going long, we're looking for bullish price action, but if you just came and sat in front of your computer and say, it looks like the up candle here, take out these highs, nice liquidity run, and here we've got two black candles forming a nice swing point here. Remember what I said, guys. This does not qualify for me as a swing point. If this black candle closed below this white candle and the high never took out that high, then I would look at it. But because we already got this narrative to say, guys, we want to go higher, we're looking for something that goes up. So if you then go, just minimize it a bit, you'll see what I saw. And this low here and this low here. I mean, this is fairly equal. So there's liquidity there, liquidity there, liquidity there. And then this all happens to fool everybody that we're going high or short. And that was my liquidity, and I waited for that to happen. Once that happened, I look for something else. We've got a fair value gap down here, and price came down at 9:30, market already closed, manipulated everybody in shorts, and look what happened here. There's a black candle, and this black candle's low is slightly lower than this white candle's open, but it closed above there. That, to me, that's it. That is all I'm needing. I know where I'm trading from now. I'm coming from a fair value gap. I've run liquidity. And guess what, guys? If you extend this thing out, we manipulate down, and that quick reaction back, close above that. That is already enough for me to say, listen, Neil, this is what you got to do. You can either enter here or look for your entry now. Now, once you see this, you got to know in your mind where, where price is going next. And that takes us to the third step here. And the third step is, okay, now that we've run liquidity, we know where we're trading from, we've seen the pattern, where do we go from here? Where's the next liquidity? And that's what we do. We look for liquidity and we trade liquidity. And the next liquidity for me would be, we've got highs here, we've got little equal highs there. All this price action where it goes down, lower highs, down, lower highs, down, lower highs, down, equal highs, that is all printed liquidity. And this is where you can target your targets. But what did I taught you guys earlier as to which highs are we targeting? Remember, on the daily, we looked at that third up candle, the two black candles coming down, and the third. Let's go back to the daily. Let me actually make it clear for you guys. if we go to the daily here, we got to mark out this high here, because that's the high we target. That's the low hanging fruit. Could we go for the this high? Of course we can. Now let's go back to our 5 minutes. Okay. Now that we ran the liquidity, and we want to target our first target. First target would be that line. So you will look for entries down here and target that first one. If market give any sort of pullback, you can look for new entries to go higher. But at this point, for this exercise, that was the target. Target was met. These guys was confused who took the short with this pin forms here. They thought this was a nice premium to go short. See, it's spinning, it's run liquidity, it's shifted. That's not us. We've determined where we want to go. We've determined where we come from, and we saw the entry, and that is all, not the entry, the validation, and we know where we want to go. And that takes me, or bring me to the very last point. Once you know where you're trading from, you have a direction, and you know where price is likely to go, you need to look for entries. And entries are quite simple in my mind. Well, if you look at the way I trade. First thing first, I'm going to show you, I'll show you 3 entries, but I'll show you one now, or 2 now, that both of them was here and presented itself. So the first one obviously is this close above here. We can go through to a 1 minute in, let's go to 1 minute and see if the 1 minute actually did anything for us. Sorry, I've got to scroll here. Because I think that's where I actually took my entry. Alright. Yeah. So under 5 minute the entry is there, but for this particular reason, yeah, what I saw on the day was we ran this low. And again, guys, remember, there's your black candles. Then you get a white candle, black candle with a swing low. That's not the swing low I'm trading. And that low got taken out. So if you took that low and not the low that I'm teaching, remember, 2 white candles and a black candle, but this black candle didn't close there, so it's also not the right one. But this was also the wrong one. We ran it with 2 black candles, and if you look closely, you'll see the black candle is lower than this white candle, but this white candle did not take out this high. This candle did. 5 minute it did actually, but in this case, if you were scared to take this trade, I actually took this trade, and I just want to show you guys. I took this trade right here. I took my stop there, and then what we did, we've targeted something right up here. And that was a good 4.5 to 1. Now, that is all fine. The other entry is to look for inverted fair value gap. And an inverted fair value gap, I will also link down in the description below a video I made a while ago. Maybe it's time to update it with a new one, where I explain fair value gap and value gaps, how to use it as support, resistance, and entries. In this case, there's your fair value gap right there. And because I'll call it the IFEG, because inverted fair value gap, and the reason that is an inverted one, we form a fair value gap, we run liquidity, and we shift basically with white candles all the way through, inverted that. Now some people will enter up here. You can wait for a retest of this, and this would have given you more confirmation, and you would put your stop below the fair value gap or IFEG, and then you go to this. This obviously gave you a much higher, almost 8 to 1 risk reward, which is great. If you were a bit skeptical and wanted to leave your stop down there, that's a 3 to 1. Look guys, these trades, if you take 15 to 10 or 2 to 1, it is more than enough for you to make money. You do this on a consistent basis, you will make money. All right, so that is 2 entries. That's the 2 entries you would have could have taken down here. But then I've got another method that I enter on trades. Let's just have a look here. I just want to show you guys something here. So now we know what we want to do, and we've got a pattern at hand, right? Now we've got 3 down candles and a white candle. Didn't close above it. Would have been a nice entry if that happened. Same thing here. It's halfway there, but it's not really there. I mean, you could have, if you really want to scalp, to take the new highs, to take those entries. But I've got very strict rules in my opinion, and that's how I use it. I took it down below, it took out liquidity. I mean, there's one here, but you get stopped out here. And the reason for that was I mean, you could have said that's a liquidity. I mean, your stop would have been so tiny, so the losses versus the reward is also very tiny. So as you can see, this is not a strategy that works 100% of the time. But if you use it correctly in the right context, I promise you, you're going to win way more than your losses are, and you're not going to worry about losses. I mean, here you can see a nice push up, close above that swing high, and that's a break in structure. Then it's down, down, up. If you entered there, I mean, you can go back and test this. I mean, this is all on 1 minute now. And that would have given you 5.7 to risk reward. And I mean, there's plenty here, but this is all on a 1 minute now. But I'm not scalping this, and I wanted to go down to a 5 minute. And in this 5 minute, I want to show you guys the other entry. But before, my other entry strategy. And I'm going to make a separate video on this, to be quite honest. And in this entry, I'm purely just finding a direction, like I showed you guys how to find a direction. Then I'm looking for some sort of a liquidity run, and then I look for a big push away, and then a retest in a discount zone when you looking for price to go higher. So let's use this. I'm going to use this as an example. This is not an entry I would have taken, but you can see prices coming down, it goes up, it's inverting here, and then it pushed, breaking the structure, and then it comes back. But now it's already in our target zone. I will take a fib, and I'll share with you my settings in a minute, and I'll take it to the high. My profit target is at 0.27, which is right over there. My entry is below the 50% mark, not at the 61. I'm only putting it there to see if anything specific is lining up. But anything below this is where you would look to buy. And guess what? You can go down to a 1 minute and see if our swing point is forming there, like a swing point that formed here, and there's a drop, but not in the direction we were, obviously targeting right now. So let me quickly show you guys. So you can pause the video here and just have a little quiz here how I set up my Fibonacci, and all the blue ticks, that's the levels that I've put on, and that just helps me with any target settings. So obviously the 0.27, that is my target level, and provided you take it in the right context or the right swing points. Let's just have a look here. If this was a down move, up move, you would have, let's look at this again. Let's look at this swing point today. If you take your Fibonacci from that low to that high, and remember the 0.27 is the target, you can see price moved away, and it literally came and tapped to that 50%. That is where you could have looked for an entry if you missed it. Then your 0.27 is right up here. if you take anything at 50% with your stop, obviously this red line below here, that's where you would put your stop, and target is up here. That's a 15 to 10. You could very easily, if you find the right swing points, I promise you, you don't have to worry. You can keep it as simple as just taking a Fibonacci, find that discount and premium. And what I mean by that, anything below the 50%, that's your discount. Anything above 50%, that's premium. You only look to buy at discount when you want to go higher. And if you sell, you only want to sell at the highest price to go lower. So that is a strategy. I know I talked a lot right now, but I think I've covered it all there. What I want to do next, I want to take you through a live example that actually played out on NFP day. And yeah, I'm going to give you some golden nuggets there. So don't go anywhere, stick around. I'm going to hop over to the NFP chart, and then let's see what transpired there. And that to me was by far a plus setup, but let me take you there quick. All right, here we've got Friday the 7th of June 2024, and this big candle here, this was NFP. This was at 8:30 when NFP news came out. Now normally when there's a big news event, I promise you guys, I sit back and relax. I'm sitting having my coffee and see where everybody trying to get destroyed. You don't trade the NFP. You wait for the NFP to tell you where the next liquidity is going to be. And what I've learned through, years of experience and charting time, when you see a big candle happen or present itself like this one and leave this nice long wick and drop into a direction here, people think we took the liquidity, we're going down, wait for retracement to short again. And that's exactly what people have done. I've been on the internet just listening to everybody else, and a lot of people were selling the short when price retraced up. That is not how you trade the NFP. What you should do is NFP, FOMC, interest rates, whatever it is. If there's a big event, make sure that you mark out the swing, the tops of those, those spikes, and even the bottoms. In this case, I'm actually not going to mark out the bottom. And the reason I'm not marking it out, we're still in the daily fair value gap. So the fair value gap already told us price might want to go higher. But we haven't seen that pattern formed yet. So we were, a little bit on the side. But when I came to the charts that day, I looked at it, I walked away from it, and I said I'll come back, around 10-11 and see if there's anything presenting itself, if it's, printing anything. So now I know where I want to trade to. I've got a slight bias with this, but not 100%. So I'm not going to put all my money on there. But when this happens, I know, okay, liquidity is here. For some reason, and I was very cognizant about the fact that it's Friday, that, price could go in the middle of the range and just go sideways and keep everybody trapped for the weekend. But I thought, let's see if anything presents itself. If it does, then I might look to try to take an enter. Let's jump right through to the 1 minute, and I'll show you exactly what I saw printing there. All right, here we go. Here's the 1 minute chart. Let's just break it down a bit. Just so you all know, there's the high. That's the liquidity we're targeting. And now I'm looking to see what's happening. Price dropped down. It didn't give me anything. All the swing points here is fairly ugly. Then there's pushes. There's a little one there, but there was nothing that stood out. On these days, we got to make sure that if you take an entry, it's got to be as clear as daylight. It's got to be clean. It's got to be everything that you want. So here you can see there's a push up, a retrace, push push, and then a push on the other direction. All right. So when I actually sat down, and that was about 9:30 was my time that I normally come into the charts here, and I said, all right, I can see the market is printing some equal lows here, so maybe if price comes down, spike through this in this fair value gap, I might look for an entry. But then something else happened. So the market actually created a fair value gap here. And we'll make that a different color so it stands out. And it printed the fair value gap here. And I was, okay, well, nothing stands out yet. And I then said, all right, guys, what's happening here? I can see it's printing some nice equal lows here. So now I'm on the same thing. I've got a fair value gap here, which is really in the fair value gap. Maybe it's respecting price or anything. There's a nice fair value gap. Closing break structure there. It goes up. It's sideways. Then it runs up. And I'm like, probably missed it. Don't want to do it. We're going to go all the way there. And this is where people start taking shorts. This is where people thought, we retraced into the premium zone. We're selling off here. Look, if it's not, this is where I wanted to trade. If it's not getting there, then it's fine, and I'll just leave it. But just reading price, I just keep extending, whenever there's anything happening. So this retracement came down, 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 down. And this was after 11. And as I looked at it, there's our pattern, right? There's the liquidity, there's the fair value gap, there's 3 down candles, but the last 2 down candles formed a nice wick into it, run those illiquidity, and close above. My entry was right at the close there, and I've put my stop just at the fair value gap 50% in case something happens, but just to give myself some room. And then I said to myself, all right, so if I'm lucky today, we're most likely going to run all the way up here. If it gets here, that's fine. We can move to break even and then hold to see if it wants to go higher. All right, but again, it's Friday. Nothing to, to hold your breath for. Then I thought, you know what, if anybody wanted to take this trade like I have, great. If you wanted to wait and see anything, like a retracement, remember we said we take the swing low to this swing high, and that is the swing high before the retracement. That's the last highest point before it retraced down. So it gave you another multiple times to enter long there. Remember, just here was the profit target, and it wasn't that far. You could have easily have made your 15 to 10, 2 to 1, 3 to 1, 4 to 1. Okay, so that is just me showing you could have, if you didn't like my entry, you could have taken the Fibonacci entry as well. Then on the other hand, we can look for inverted fair value gaps. There's a little fair value gap there, and you can really play it down, or if you could have taken this one that was standing out and it went up, close above it, you could have bought it there. I didn't take that. I'm just looking for these things, to validate, to keep me on the same side. I know there's liquidity up there. From experience, I'm happy to just leave this trade and let it run. When it came here, I was at break even. It turned around and I thought, I'm probably going to get stopped out at break even. But this thing actually ran up, just missed it. I thought, geez, this is probably just going to fool with us because it's Friday. And then it ran liquidity. But what happened down here is It went up, it came down, it went up, it went down, it went up, down. This is all, I mean, if you, someone that trades, I don't know what you call this, Trendlines, I mean, this is all, liquidity that's forming. And that's where you want to go to. I did not take the short here, but if you were eager to say, all right, guys, we've run the liquidity up there, because remember Neil said there's liquidity on the top side and there's liquidity on the bottom side. Once we run the top side, let's look for entries to go short. Now, again, I don't take the trade, but running liquidity, this was your next trade. That candle down there, remember, white candle, black candle. And you could have you could have looked for anything down here. This swing low, very equal low. Say, let's go there. That's a 6-1. Then if you weren't sure about my entry, you could have looked for an inverted fair value gap. And that would have gotten you in on this candle here. That would have given you another 3-1. Or if you want to be, just holding it tight there, another 4.5-1. I mean, there's ample, as long as you know where you're taking your trades from. Remember, now you've got this push. That was an early entry. That was an entry. You want to see something up here. You take it to that, because that's the low before the retracement. That's your entry. That's another entry. And it took you all the way down, but not all the way down. It took you down, deep enough for you to secure some good profits. But if you one of those people not trying to hit the home runs, just wait. Just take money off the table. If you're just Fibonacci trader, if there's a pullback, go to the 0.27, take that 15 to 10, and that's a winning trade. I mean, if you take this trade of mine that I like to take, this I take, I look for 2-1s. This low here would have been a good one. It would be in a 3-1. But if I get 2-1, I'm happy. Even with the inverted fair value gap, you can also look for 2-1s, or just look at your next liquidity. Just trade from liquidity to liquidity. So let's just recap this quickly. You gotta go on the daily. Look for the pattern. Once you've seen the pattern form, you know what you're expecting the next day. You can carry on with life. Come back tomorrow and wait for that manipulation to set up. Look for fair value gaps and liquidity where it's trading from, and then look for the entry. Then, build your case from there, one step at a time. I'll put this in the description. This is what you do first. That is what you do next. And then all you got to do is enter this bloody thing. You don't have to sit and wonder, should I not? If you're not certain with this, guys, go back and test the hell out of this thing. Don't just come and say, oh, because Neil said it, now it's going to work. You got to get into tune with this thing. You got to make sure you read it right. You don't miss any steps. You're comfortable with this. Open a demo account and put enough money in a demo account as that fits your pocket, what you would want to trade. Then put the rules to that like it's real money, because when you trade real money, it's completely different to trading play money. But use the play money to get comfortable, to use it as testing, forward testing, back testing. If you got questions, pop it in the comments below. I'll be more than happy to assist you guys, to help you. And just keep an eye on my channel, because some days I will go live and trade live, and be live in, in the market, maybe more PM session than AM session, but I will be there and I will try to guide people through it. I will post, under my community, the trades I'm seeing, the trades I'm taking, and the befores and afters. I'll try to record them and then make a little post to show people. And yeah, let's see how this week goes. And then don't overtrade, guys. Don't go crazy. Just take it one step at a time, because I can tell you, once you master this particular strategy, just this, if you master this, the world's your oyster. I mean, you can make as much money as you want, and there's many ways to do that. And if you got a small account, there's other ways to get bigger accounts. And but it will be, it's a skill that's worth it at the end of the day. I will make more content like this to take you guys through it. And if there's anything specific, this by the way works on any instrument out there. If there's a particular one you want me to make a video on, just let me know, and I'm happy to pull up the charts and see what I see and why I would have taken it and why I would not have taken it. But be safe, trade well, and I'll speak to you guys in my next video.